Hello, my dear YouTube viewer, and welcome to myfinanceteacher.org. Today we're going to have a look at a valuation of two of the largest gold miners in the world. Those are, of course, Newmont and Barrick. And this valuation model is as of October, after their Q2 2022 reports came out. In the next 1 or 2 weeks, I will also provide an update based on the Q2 reports for the members at myfinanceteacher.org. So feel free to join us anytime you want. And my valuation model is basically quite logical. We'll look at the discounted per share value of the miner after all-in sustaining costs, after long-term debts, and after taxes. And within this model, the valuation factors are, of course, the gold, silver, and copper prices, the amount of reserves and resources the miner has in the ground, the amount of debt they have, taxes. We look at per share value, of course. We do take into account the time value of money, and we also look at the amount of shares in the insider hands, as insiders being aware of what's happening with the company, what are the prospects. The more shares are in the insider hands, the better the prospects might be. And starting with the first one, the gold price, as usual, we're going to have 3 scenarios: balanced, conservative, and optimistic. Our conservative gold price is going to be $1,600. Our balanced gold price is going to be $1,900, and our optimistic gold price going into the future is going to be $2,200. Think of these as the average levels where gold price might fluctuate in the longer term, as these sort of valuations tend to work out in the longer term, while the day-to-day and even week-to-week market fluctuations might move the share price away from that longer-term perspective. Moving on to the reserves and resources that the miners have in the ground, for Newmont, they have over 90 million ounces of proven and probable reserves of gold, plus nearly 68.3 million ounces of measured and indicated resources, and in addition to that they have quite a lot of inferred resources. Inferred resources are not included in my valuation, making all of the valuations, even the optimistic one, that much more conservative, as none of the inferred resources are actually included in any of the calculations. For silver, Newmont has over 568 million ounces of reserves and over 422 million ounces of measured and indicated resources, never mind inferred resources. And Newmont has quite a lot of copper reserves and resources. For Barrick, gold reserves are nearly 67 million ounces and M&I resources are 91 million ounces. For silver, Barrick has 130 million ounces of reserves and 860 million ounces of M&I resources. And Barrick also has quite a lot of copper reserves and resources. Looking at production costs, we'll look at all-in sustaining costs. That's actually considerably more than cash costs. Again, we're slightly more conservative in our valuations. And looking at long-term debts, we see that all-in sustaining costs for Newmont are $1,130 per ounce of gold equivalent, GEO. That's a little bit higher than the costs for Barrick, which are only $1,080 per gold equivalent ounce. Long-term debt for Newmont is also quite a bit more at over $6 billion, whereas for Barrick it's over $5.1 billion. For taxes, to simplify things a little bit, I just assume 20% taxes within the valuation model for any of the miners. Looking at the per share value and time value of money, Newmont has nearly 794 million shares outstanding. Out of those, 0.17% are in the insider hands, which is not that much. And we discount the valuation of the reserves life, which is 13.4 years if we only look at the reserves, and adding just half of the M&I resources, again being conservative here, that extends the reserves and resources life to 18.5 years. For Barrick, they have 1.77 billion shares outstanding, with a larger percentage in insider hands at 0.59%. The reserve life is 15.6 years, adding half of the M&I resources extends the reserves and resources life to 27.4 years. And using the discount rate of 5%, we are looking at 3 of our scenarios, starting with a conservative one, which assumes the gold price will stay somewhere around $1,600 over the next few years. And within this scenario, we don't even include any of the M&I resources as well. We only look at the proven and probable reserves. And with our model giving us a discounted per share value after costs, debts and taxes, we get a conservative valuation around $29.41 for Newmont and $10.26 for Barrick. Looking at Newmont here, for example, with a share price around $45 right now, you can clearly see that if gold price does drop out of bed and just fluctuate around $1,600 for quite a while, there is quite a bit of risk in Newmont in that case. However, the question here would be, what are the chances of gold price averaging around $1,600 over the next couple of years? In my opinion, the chances are not very high. But let me know, what do you think about gold price into 2024-2025? Let me know down in the comments below. And we're going to move on to our balanced valuation, where we plug in the gold price of $1,900, but we still only look at the proven and probable reserves. We don't include any of the M&I or inferred resources at all. That gives us the discounted per share value after costs, debts and taxes of $47.68 for Newmont, not that far from the ongoing price right now, and for Barrick that gives us $15.9 per share. But again, that's not including any of the resources, that's only looking at the existing reserves. And finally, looking at optimistic scenario with the gold price of $2,200, where we look at the proven and probable reserves as well as only half of M&I resources. So we are throwing away half of those M&I resources and we don't include any of the inferred resources, again making our valuations that much conservative even with the optimistic scenario, where we get the value of $86.13 for Newmont and $29.54 for Barrick. And again, a reminder here, this is not a precise prediction. This is a general fundamental valuation of what the companies have in the ground. Again, staying quite conservative with the resources that we include. And day-to-day and week-to-week market fluctuations might again move the share prices closer or away from these fundamental valuations. For more detailed updates on the gold miners as well as a lot of other types of assets, join us at myfinancesteacher.org. As you see at the side here, we look at a range of commodities, we look at cryptos, energy, we look at precious metals and the general stock market. Have a pleasant weekend. Bye bye.